Hello everyone, welcome back to Wealth Growth Club. Today, let's talk about S Bank, a company that's seen everything from glory days to crisis and now is on a journey of recovery. Let's walk through their story using real numbers so you really get what's happening. Let's begin with sales or revenue. 10 years ago, S Bank's yearly revenue was around 10,000 crores. Today, that number is up to almost 31,000 crores. That is about 10% average growth each year. But it hasn't been a straight climb. Some years saw huge jumps like 46% in 2019, and some years saw big drops like minus 23% in 2021. Most recently, revenue grew around 12% over last year. If someone asks, is S Bank's growth smooth? The answer is really no. It's up and down with some volatile swings. If we check the expenses, back in 2014, they were spending just over 2,000 crores to run the bank. Today, that is about 12,000 crores per year. Most of the time, about 10 to 15% of this goes to paying employees, with the rest split between other costs, interest, and provisions for bad loans. A few years ago, other costs shot up because of heavy write-offs, especially during the crisis when bad loans became a problem. Now, let's talk about the core financing profit and margins. This number is like the bank's heartbeat. Sadly for S Bank, it flatlined for a while. Until 2019, margins were healthy around 7%. In 2020 and 2021, high bad loans and interest costs dragged margins deep into the red. Just recently, the financing margin is still negative, minus 10% in the latest year. But losses are shrinking as the bank recovers. Other income steps in sometimes, like a life jacket when the boat is sinking. Last year, S Bank made over 6,700 crores from non-banking sources, about 163% of pre-tax profit. For a healthy business, we want most profits to come from banking, not from side hustles. For S Bank, a big chunk of recent profits is one-time or non-core. If you notice the interest, S Bank pays huge interest, 21,748 crores in the latest year. That shows they borrow a lot, which is risky for a bank. Depreciation, or the lost value of assets each year, is steady around 360 to 490 crores. Let's get to the net profit. A decade ago, profits were climbing, hitting 4,200 crores in 2018. Then came disaster. In 2020, a loss of 16,433 crores. Last year, the bank made it back to a profit, 2,739 crores. For EPS, shareholders struggled during the losses. EPS was 8.94 rupees years ago, turned negative, and is finally limping back to 0.88 rupees now. Talking about dividends, there aren't any right now. S Bank hasn't paid out to shareholders in recent years, preferring to save cash and rebuild. So, overall, if you look purely at the numbers, it is a roller coaster. Good years, a spectacular crash, and now signs of recovery. Revenue growth is bumpy, not stable, sometimes shooting up, sometimes dropping back. Big swings in profit, and margins show how shaky things have been. Most of last year's income came from non-banking activities, not the bank's main business. The company's return on equity is just 5%, still lower than its big bank competitors. The growth is unstable because high risk lending, not enough checks on bad loans, and taking on more debt than it could handle. Management and regulation crackdown, and recovery has taken years. So finally, S Bank is still a work in progress. It's coming out of crisis. Profits and assets are stabilizing, but consistency isn't here yet. If you like banking stocks, you want stable, steady, growing numbers, S Bank is not there yet. For now, it's a story of survival and rebuilding, not predictable growth. Thanks for hanging out with me on Wealth Growth Club. If you want breakdowns on more companies, subscribe and drop your next request in the comments. See you soon.